Hello and welcome to this week's Ferrari Financial US Market News Summary. Well, it was a tumultuous week on Wall Street this week. The week started in a terrible, gloomy mood after the Asian markets and the European markets sold off very, very strongly on Monday. But Monday, of course, was a holiday in the US for the US markets, Martin Luther King Day, in fact, and this almost added to the tension that built during Monday in expectation of Tuesday's open. And when the market did open on Tuesday, of course, it just dropped like a stone. The Dow, in fact, was at 455 points down. So a very, very grim mood on Wall Street on Tuesday. But, of course, the Fed stepped in and cut 75 basis points in an emergency interim interest rate cut. And, of course, this completely changed the mood on Wall Street. And on Wednesday and Thursday, we saw a tremendous rally, which really did pull the market back up again and made progress towards something that we pointed out last week, which was the neck and shoulders line, the neckline, in fact, where we do feel the market will attempt to rally back to in the next few weeks. Let's take a look now at this week's Nasdaq Composite Index chart. I'd like to take a look now at the one-year chart for the Nasdaq Composite Index, so we can really zoom in on this head and shoulders reversal pattern, which is the pattern that we've been predicting for some time now for the market to reverse direction, and this has in fact happened over the holiday period. It all started back in July and August of 2007 when we had the left shoulder being formed at the first breaking of the subprime mortgage problems. That news caused that sudden drop in the market and formed the left-hand shoulder. And then we had a rather nice autumn rally, certainly in tech stocks, which took the market back up again to new highs and formed the head of the pattern, which is this area here, before Christmas, where we quite accurately predicted that the market may well then form a right-hand shoulder. So we were expecting a little bit of a pickup before Christmas, and over the Christmas period it continued before falling away coming into the New Year period. And in fact, the sharp drop at the end of last week, particularly on Friday when the Nasdaq on one day dropped nearly 100 points, this penetrated what was effectively the neckline. This line here is the neckline of a head and shoulders pattern that has now formed and is a very significant line to be penetrated. We do feel that there is little chance now of the price channel that was formed over the last 2 months continuing, because the penetration seems to be quite certain here. So there's less likelihood that this is just a continuation of a consolidation phase. More likely that selling will continue into the new year a bit further down, before then some sort of rally will be attempted to bring the price back up again to touch, or in fact just go over by a short measure, the neckline line here, which will then probably signify the market turning south again and falling away in a more prolonged downtrend. So we had a tremendous rally on Tuesday, Wednesday and Thursday, a little bit of a sell-off, I think, on profit taking on Friday, but the market really did end the week in far better mood than it started. And it has a lot to look forward to next week. It's the State of the Union address from President Bush on Monday. Tuesday and Wednesday it's the Federal Reserve's scheduled meeting, the first of the year for the Federal Reserve, when the street really is looking for another cut of 50 basis points, 0.5% from the Federal Reserve, on top of the 75 basis points it had last week, to really show the Fed's commitment to the lowering of interest rates to stimulate the economy. This, together with the fiscal package that was put on the table last week by President Bush and Paulson, etc., where tax cuts and incentives really should help to lift this economy a little. Going forward, the scenario certainly now is a little brighter than it was at the beginning of last week. So where do we feel the market's headed now? We do think that consolidation will occur at this level. The level we're at the moment, around about the 2,400 for the Nasdaq, is the theoretical level we would have expected the market to have consolidated after this rather very prolonged downtrend that we've had since just before Christmas. And so we do feel that a period of consolidation will occur at this level. Where it goes from there really depends on developments in the next couple of months. But until next week, it's goodbye from London.